What is up, everybody? We are here with another market update, and we got big changes in the real estate market. We got changes to the channel, we got changes to the video, changes to the data. We got all kinds of stuff here, and it's all the stuff you need to know in order to make the most informed, intelligent decision for yourself and for your family in this crazy real estate market of Miami-Dade. So if that's you, if that's what you're looking for, this is the video not to miss. Jake Fletcher here with the Fletcher Group at eXp Realty, your Miami real estate agent. And I gotta say, guys, again, this is one of the first videos I've made since my channel hit 1,000. And I just wanna say a quick thank you to anybody who might've missed my last video. It really means a lot to me. Thank you guys so much. We hit that 1K. Let's get to 2, let's get to 10, let's get to 10,000 and beyond, all right? So this video is gonna be covering condos below the $1 million mark, which represents the non-luxury market, okay? That's the vast majority of properties, or about 90% of real estate here in Miami. So we're gonna start breaking up videos like this into luxury market updates and regular market updates for more accurate data that represents each segment of the market, including luxury data in the rest of the market actually skews things a little bit, and vice versa. So we're gonna be doing things this way to give you a more realistic understanding of the market. For example, if I didn't adjust this price data point based on median sale price, then condos would appear to be $414,900 right now on median. But with this adjustment, we can see that the median sale price for non-luxury condos, again, $1 million and below, is actually $386,500. So from $414,900 to $386,500. So that just gives you a little bit of an idea of how things can be skewed. And I'm always looking for ways to improve what I do, provide more and better value to you, the public, and to give you the best data that you can find anywhere on YouTube and beyond. But best of all, you can always reach out to me for specifics regarding your specific personal situation, because everybody's different, and all my contact info is in the description down below. If you'd like to reach out, I'd love to hear from you. So speaking of median sale price, we are going to take a look at this graph right here. First and foremost, this is the median sale price for, like I said, non-luxury condos. And like I mentioned, it's currently at $386,900, I think it was. I think I put 600 in my notes, but $386,900, which is up $16,500 from the month before in March of 2023. We're looking at that green line there. So we're at like all-time highs for non-luxury condos. That's a 4.5% month over month increase, okay? Which is also a 10.4% increase year over year from April of 2022 over here, okay? So, that's a big deal. The April median sale price was $350. So to go from $350 to $386,900 over a year, again, 10.4% increase. That's actually a little bit more than what the increase was for single family homes. So condo market is hot, all right? And it's worth pointing out that all along this upward green line here, there have been countless people saying, to me and in the media and out into space, that they're waiting for the market to crash. The market's definitely going to crash. I'm waiting for the market to crash because there's no way prices can keep going up. And they're banking their whole real estate strategy around this flimsy reasoning that the prices don't make sense and that they have to go down. Well, how's that working out for those people now, okay? And like I always say, and I didn't come up with this, it's just a saying in general, but time in the market beats timing the market every single time, okay? So let's talk about days on market next, which is the blue line here. And we've seen days on market increase since July of 2022 when it hit this trough. Pretty much done nothing but increase the whole time. There's been a couple little oscillations, but it's basically just increased until the last month. We're gonna talk about that. But we're up to 57, we were at 57 days on market in July of 2022, and we're up to 74 days on market now. So condos rather, are taking a bit longer to sell on average, but they've been floating in the 70 range here for the last 4 months, okay, or the entirety of 2023 so far. So it seems that days on market are starting to sort of settle. We're going to be continuing to look at that and see if that's actually a trend that is occurring, but it kind of feels like days on market are starting to settle into sort of a normal, range as people get used to the higher interest rate environment that we're in right now. Okay, so that's interesting. And, just to show you guys, I mean, the market is super hot. Miami-Dade real estate posts its 7th best March in county history. Okay, that's over 100 years, and total sales surge ahead of pre-pandemic levels. We're going to talk about sales here in a second as well. But the market's hot. Miami is an outlier compared to almost every other market in the country, and looks like it's the most stable market in the country, if not the world. Okay, so like I said, let's talk about sales next, which is this graph right here, and sales. This is our graph right here. Sales versus the closed price to original price ratio. Closed price to original price ratio is simply the measure of what a property was listed at versus what it actually sold for, okay? So sales are up since January, which is normal to see a bump in sales after the holidays. And in January, we had 766 non-luxury condo sales. And in April, we ended with 1,102, which is an increase of 336 units, or a 43.8% increase, okay? It's important to note that 766 number was, historically speaking, very, very low, okay? And we've also seen a decrease in sales since March when we were at 1,277, okay? So, again, we're looking at that green line. You see that little dip down. We're at 1,277 there. Now we're at 1,102 in April, which is a difference of 175 less sales, or a 13.7% decrease. So that's notable. We're going to keep our eye on it and see if the market is slowing down in terms of sales. Could just be an anomaly. Could just be that, people are kind of waiting until the summer. We'll see. As for closed price to original price ratio, which is, again, like I mentioned, the measure of what a home was listed at, or a condo was listed at, versus what it sold at. So in April, we ended with a 96.5% closed price to original price ratio, which has been pretty stable now for the last few months. We see that blue line kind of stabling off there. And the lowest that it got was in January. You see that dip there, which was 95.5%. So that's a 1% increase since there. So if you want a good deal on a property, the window could be closing, but it definitely remains to be seen. Anything can happen, but the trend is that list prices are getting closer to sale prices, okay? So let's take a look at the next graph here, which is inventory. So active number of listings versus new listings. That's the green line and the blue line, respectively. Active listings, aka supply, is super low. But fortunately, it's fairly stable. As you can see, it's sort of trending downwards, but at least it's not like a complete death spike or death fall, whatever, like it was here. But hopefully we see a spring and summertime bump in inventory. Right now, active listings are up at 5,307, which is 635 units year over year higher, okay? So compared to last April over here, 635 more units. That's a 13.6% increase, but it is down 306 units from March of 2023 last month, which is a 5.5% decrease, all right? Now, new listings are also down month over month at 1,567, down from 1,892 in March of 2023. So that's that little line down there that we see. That's a 325 unit difference, or 17.2% decrease. And year over year, that 1,567 is down 517 units of new inventory from last April. That was over here, right? Which is a 24.8% decrease, which is pretty substantial, okay? So you can see how new inventory has really slowed down in coming to the market. And this lack of new supply is heavily influential as to why prices just keep climbing up, okay? If we had like a crazy spike of new inventory, then we would probably see, that, hey, maybe prices will start to normalize and flatten, or maybe even decrease, but there's no reason to suspect that we're gonna see just this crazy onslaught of inventory coming into the market, especially with high interest rates, because sellers are not incentivized to sell when 85% of homeowners have an interest rate that's 5% or less. And then right now we're in like the upper sixes in terms of the average 30-year fixed rate conventional mortgage. So why would you sell your home and get rid of a lower interest rate to then have to buy a new property that is going to have a higher interest rate, right? So there's not a lot of incentive for sellers to bring their properties to the market. Again, that's why we're really seeing a decrease in listings, okay? Now, lastly, let's look at months of inventory, which is basically just a measure of, hey, if no new listings came on the market, how long would it take to sell the existing supply, all right? So long story short, we're back in a seller's market at 5 months of inventory, down from 8 months of inventory in January. That was this little peak here where I was like, oh my gosh, the seller's market is done, it's over, life can return to normal. Not so fast, right? So as sales have continued to trend upwards and inventory remains low, you can expect that we'll remain in a seller's market, right? Because, there's not a lot of inventory. It doesn't take a long time to sell that inventory, right? Especially as demand remains high. So what does this mean if you're looking to buy a condo? What does it mean if you're looking to sell a condo or invest in a condo? So if you're looking to buy, again, time in the market beats timing the market every single time. Figure out a plan to get into the market, get your foot in the door. I'm here to help you with that, of course. Everybody's situation is different. So that's why professionals like myself exist, is to help you parse the market, figure out what strategy makes the most sense for you. It could be that, hey, a year, 2 years ago, you were looking at a certain price point. Maybe now you can only afford, a little bit lower of a price point, right? But there's ways to sort of make that make sense for you, right? Maybe you only live there for a year and then you sell the property, use the liquidity to buy a better property that's more of a long-term thing. Maybe you turn it into a rental property and use the income to qualify for a more expensive property. There's ways around it. There's different strategies that we can talk about one-on-one depending on what your specific situation is, but get in the market now. I personally am thinking, we could see, if the government doesn't default on its debt and we continue to see inflation slowing down, we could see interest rates starting to slow down a little bit and decrease. The Fed has already made it clear that they're most likely not going to be doing another bank-to-bank overnight rate increase in June. So that's a good thing. Fingers crossed. Hopefully they continue with that idea. But if we do see rates go down, that could make buying more feasible for people. So, personally, I think, if you're saying, hey, I might wait till like the summertime or the end of summer or, later on in the year, that might not be a bad strategy. But keep in mind, prices probably aren't going to be going down. Like very, very, very likely prices aren't going down. So as prices go up, yeah, interest rates might go down a bit, but is the difference that, interest rates go down going to make up for how much prices go up? It depends on a lot of factors, like how much do interest rates actually go down. If you're trying to sell a condo right now in this market, as you saw with the median sale price, it is super high. It's all-time highs for non-luxury condos. So it's a great time to cash out on the equity that you have in a property. Of course, somebody like me is absolutely, there to help you. I'm here to help you. An expert is going to be able to give you the best marketing for your property and make sure that you maximize that value. Make sure it's headache-free and as seamless and smooth as possible, okay? Personally, I put my marketing up against anybody else in the market. Out of all the 50 or 55,000 realtors in Miami, I'll go toe-to-toe with any of them with my marketing, guaranteed, and I will get you the highest value for your property. So, that's really what it's about, is having the best marketing, standing out above the crowd, and getting the buyers that are in the market to want to choose your condo over others, all right? And there's a lot more that goes into it. If you want to get more information about your specific situation, of course, I'm here to help you. Now, if you're looking to invest in a condo, right now, it's all about what is the monthly payment if you're not going to be paying cash because you know the interest rates are high, and what is the monthly maintenance fee. It's about making sure the numbers work and that they make sense. Again, that's why an expert like myself is here to help you figure out where do the numbers make sense and what buildings should you invest in, should you not invest in. You know, of course, there's a lot that goes into it, but for investors, really at the end of the day, it's just making sure that the numbers make sense. And also too, I personally believe investing in condos that have a good reserve budget is a smart strategy because you're less likely to get hit with assessments that are going to increase the cost of holding that property. So those are my thoughts. I hope that was valuable for you guys. Hope you enjoyed it. Yeah, you know, this is a crazy market, you know, so there's never been a better time to work with a market expert, somebody who knows the data like the back of their hands. I have so many stories that I could tell you about how my knowledge of the data and of the market has helped my clients to negotiate better deals for themselves. And, you know, like you saw with the close price to original price ratio, yeah, the market's getting tighter in terms of like the demand to price ratio, but there are still deals to be had. I'm getting deals for my clients all the time, right? It's all about, you know, having the right strategy and, you know, knowing what a property is actually worth. Okay. So guys, thank you so much for watching this video. If you made it this far, there's literally no reason on the planet to not hit subscribe. If you haven't, I don't know what you're doing with your life, but thank you guys so much for watching. Jake Fletcher here with the Fletcher Group at eXp Realty, your Miami real estate agent. And again, thanks for 1,000 subscribers, guys. You know, means a lot. I appreciate you guys. Much love, and I'll catch you on the next one. Peace.